All right, everyone, welcome to episode 29. Today we've got a very special guest with us from our Washington policy team. Joining us today is Ellen Ehrnrooth.
Thank you so much for having me.
Before we dive too deep, I want to give a little bit of a background. Today, Ellen is part of, like I said, our Washington policy team, providing market analysis on global policy developments around geopolitics and defense, supply chains, trade, export controls, energy, and industrial policy, among other macro issues. Prior to joining Raymond James as a research associate in 2022, Ellen worked in global financial policy issues at the Institute of International Finance. She holds a BA in International Relations and Japanese from Tufts University. Very well qualified to speak on some of the issues that are impacting markets today. So let's get right into it. We're recording this April 15th, tax day in the US, but everyone's attention is definitely on the Middle East right now. So where do we stand with what's happening in Iran?
Yeah, as of today, this time of this discussion, the blockade that the US moved to impose is very much in effect. Seeing some analysis starting to come out of several tankers turning around with this enforcement taking place. Negotiations, both direct and indirect, are still ongoing. And the long and short of it is that we do overall think a deal can be found. Not going to be an easy path, and the risk of escalation certainly remains on the table. But at this point, we do think it is likely that they will try and find a way to ease off. President Trump especially is looking for an off-ramp. Probably in the coming months, we start to see a wind down. But in those interim weeks, the blockade still in effect. The US military can do it. There's about 10,000 personnel, over 12 ships and aircraft in the region that are enforcing this blockade. It's a very personnel-heavy effort and something that's going to be challenging to sustain over the long term. I think adding to this view that we may be approaching a resolution in the coming weeks. With this blockade in place, Iran does have a few weeks of kind of a buffer period. Certainly should expect an acute economic impact from this, but with about 150 million barrels of oil in the water, they do have a little bit of wiggle room, and this view that, the longer they can hold out, the more they can get out of this. Negotiations, we had these marathon talks last weekend, 21 hours of the first direct negotiations since 1979, which didn't produce an immediate breakthrough, but the fact that it happened at all is a pretty big deal. In that sense, not a huge surprise that nothing came out of that one meeting. The JCPOA back in the day took a full 2 years to negotiate. And coming to today, we've had some reports in about 10:30 Eastern that US and Iranian negotiators made some progress yesterday. They're inching towards a framework. Trump continues to have these signals that the war is close to being over. Mediators continue to be very, very involved. The kind of next term catalyst to watch is potential talks in Pakistan, maybe later this week. The UN Secretary General said, additional talks are highly probable, especially ahead of this ceasefire expiration next week. We do think this ceasefire probably gets extended. And this talk about a framework, this big sweeping deal is going to be exceptionally difficult. But if we have this lasting ceasefire without a full resolution, give some space for negotiations to continue, maybe that is how we, make our way forward. But again, cannot discount the risk of escalation. That major US military buildup continues. News out this morning that they're sending another 7,000 personnel to the region. And I think, should we see a lack of progress in negotiations? Because again, these are extraordinary complex negotiations. I think there's point made of where Iran's maximums are still not quite in the same ballpark as US minimums. Should there be a bit of an impasse? Maybe we see President Trump try and move the needle with a kinetic escalation. Iran has started to threaten operations in the Red Sea on account of the blockade, much being made of Karg Island as a potential target, still probably the likeliest one. But the last thing I just leave on is that we're already a little bit of the way there in terms of the blockade, having that economic effect. That would have placed Karg as a potential target for kinetic/ground invasion. So
You've talked a bit there about the potential for a positive resolution, but you also talked about some of the downsides of what could happen if we, saw some negative outcomes from this. The markets, if we talk about financial markets, particularly equity markets, kind of in the outbreak of this war, we saw about a 10% decline in equity markets. And over the last couple of weeks, we've seen almost all that eroded with a significant recovery in equity markets where we're back almost to all-time highs. So it seems to me that the market is pricing in a positive outcome to this and, potentially discounting some economic effects that do come from this if we see this spread out, like you said, over a few months, or if we do see a negative scenario play out. It seems like maybe markets are being a little bit complacent here or, kind of approaching this from a rose-colored glasses perspective. So I'm curious on your comments on that.
Yeah, I mean, look, as you said, in this very current moment when we're talking, it's a lot of this is being driven by this optimism that things can get done. But more broadly, I think a lot of it is a little effects. We're having this discussion not only in the thick of negotiations, but also here in DC in the middle of IMF and World Bank spring meetings. Finance ministers and those economic officials from around the world have all descended on DC this week. And the big message coming out of the events, I think, with regards to this, is that there's been a bit of a time buffer and a localization effect. Of course, Asia has already felt the most near-term economic brunt of this, but this, starting to percolate to Europe, the rest of the world, and then maybe at least the US. The US has had a bit of a buffer from being this leader in energy production, but, the last round of ships that departed the Gulf, before the onset of hostilities starting to make their way to ports now, there has been a little bit of that time insulation, which I think is definitely adding to that sense of complacency and adding to that, perhaps overly rosy outlook on what the long-term impact of this. There was a comment I saw this morning that I thought was really interesting in Intel. Even if hostilities were to stop tomorrow, the time frame for a full reopening of the strait was about 4.5 months, which, I think certainly if there was a, resolution tomorrow, markets would react accordingly, but that tail risk definitely still persists.
Is there a level of oil prices that you would start to think that complacency would dissipate and markets would start kind of pricing in something much more cynical?
Yeah, I mean, look, I'm not an oil economist, but I definitely think there's a very kind of political psychology threshold there here. Certainly, I think, earlier in the war, there was a lot of like, oh, oil's going to hit 150, it's going to hit 200. And I think that, some DC analysis, I think, has some impressions is, it is simply not politically viable for oil prices to reach that point. And as such, the trajectory of the conflict will move in that direction. I think within the broader context of the extent to which there's maybe been some, efforts to intervene in there, I can't necessarily speak to the veracity of that, but I do think from a kind of, 100 already, everyone knows that's a very, politically, psychologically sensitive threshold. But, the extent to which that remains sustained above that level starts creeping up to 150, that is probably more in that range. But I think that the closer we get to that, the more aggressively the US tries to take measures to wind down the war. And, the extent to which there's flexibility on the red lines and conditions on which I do think tends to accelerate. There's one other statistic I'll leave on that I think, again, especially from the US context and the political pressures driving Trump to try and wind up the war. The average, American fills up on petrol and gasoline 50 times a year. And that is 50 individual data points to see increases in energy costs in real time. It's one of the inflation, is the economy stupid? Economic impacts certainly are what arguably the most present force in American voter behaviors, arguably one of the biggest things that delivered Trump his victory in 2024. But again, across those 50 points throughout the years, it's the psychological effects on that definitely can't be discounted.
I have a hypothesis of my own in terms of why the markets are as complacent. And I think, if you look back to the start of this year when AI and the whole tidal wave of developments on that front was kind of causing its own volatility in markets, I think a lot of that AI, the development in AI is largely deflationary. And maybe that's not in the immediate term, but I think in the midterm, a lot of the progress on AI is deflationary, and I think that's creating a little bit of an offset to the potential inflationary pressures in the oil markets, and that's remains to be seen. But that's my sneaking suspicion is that's playing a small role.
So that's an
Sure.
interesting view, and I'm not sure if I agree with it. I'd be curious on Ellen's thought, but it's like, the deflationary effect, if it does exist from AI, is longer term in nature. Where does it have an immediate offset to, the significant but present, uptick in energy prices, which are inflationary in the short run? Interesting perspective, but not sure if it really, holds a lot of weight.
No, it's a super interesting one. I guess the other thing I'll say is someone whose full-time job is, trying to translate the market's impact of these big geopolitical developments, the kind of long and short of it over the past few years. Yes, of course, we had this more adverse near-term reaction, but the market has overall kind of shrugged off a lot of these big geopolitical events of recent years. We've had, big things happening, the war in Ukraine, developments in Gaza, the previous bombings of Iran, all within the kind of broader arc of history, significant from a geopolitical perspective. But the kind of, when you zoom out and look at those charts, the long term, it was a bit of a kind of shrug reactions. I have to, I think people, with the kind of broader political volatility we've seen over the past year and a half, I think there's also, to a certain extent, a bit of a desensitization. We're all buckled in and along for this ride, and with that broader trend of just like the, again, overall muted reaction to these events. It's a very interesting one.
Curious, Ellen, just with what you mentioned there, where markets have shrugged off these geopolitical events. I mean, a war in Iran is a significant event that really the market has shrugged off, as we're talking about. I mean, what would it take? Like, what scenario would it take to play out where markets don't, shrug this off, and actually this becomes a longer term issue for the economy and markets?
Yeah, I mean, I think, once we start getting into those more escalatory scenarios being, that continue to percolate as potential options, those being things like the threatened strikes on energy infrastructure, civil infrastructure around the region. That is something that, when the kind of the long-term rebuilding, long-term return to normal operations, both in terms of, the Middle East as a major energy producer, if there's all those facilities destroyed, that certainly extends the timeline for the return to normal operations. The actual blockading of the strait being a somewhat separate issue at that point if those facilities are entirely destroyed. Ground operations, I think that has more of a kind of psychological effect. But again, it's one of those things that, people perceive it as a lot more real once you start seeing, at least within the US, boots on the ground have a pretty profound psychological effect in that kind of, oh, this is real sort of moment. The US especially has overall been relatively insulated from the impacts of the war, right? Like, of course, gas prices are one, some of those knock-on effects for, other cost of living pressures. But for the most part, the US has been relatively insulated to date. But the kind of visual effects of, seeing US troops on the ground conducting those ground operations, I think does, in terms of the broader long-term trajectory of the war, concerns about this being a more dragged out thing. It's easy to put people down and start a ground operation, but much harder to disentangle. So I think that would be the scenario where, that overall outlook starts to shift.
Outside of markets, we're going through earnings seasons as well, which I actually think that's what's driving markets more recently, as well as some valuation reset that you've seen within certain sectors within the market. That's actually what I think is driving it, and the fact that bond yields as well have essentially found a bit of a ceiling here. But if you kind of go through earnings season here, and some comments recently from U.S. financials in particular, JP Morgan, they've indicated that under the surface, the U.S. economy is actually doing okay. And some of the recent data that we've heard is kind of reflects that. So kind of circling back to this Iran and hopeful off ramps here, what the market may be telegraphing, Trump certainly has to be paying attention to that as he approaches midterm elections here coming up into the fall.
Yeah.
From his standpoint, he needs to see an off ramp and any sort of lingering inflationary pressures subside before we get into that fall. Like, where does he stand on and Republicans on the midterms?
Yeah, so I guess stepping a bit further back on the overall outlook, and then I'll touch on Iran. As we look towards early November, our expectation is the setup for Democrats in the House is very favorable. This was even before the Iran war, but when you look to the outperformance in the off-year elections, recent polling, and also just the very, very slim nature of the House Republican majority, it's not a lot of seats they need to flip. The Senate is a much bigger question. We last I looked on, Polymarket, it was like a pretty 50-50 split. I think we're a little bit more cautious on that just because the math is going to be pretty difficult for Senate's Democrats to flip. But regardless, even if it's just the House, that still represents the loss of the Republican trifecta and the associated political and legislative maneuvering room that you have. Congressional Republicans, the White House is acutely aware of this dynamic. The war is not polling particularly well, to say the least. And I think, the combination of that, energy prices and such, there is a strong desire within the White House to wrap up the war sooner than later. I think the fact that, again, we're switching to a blockade, yes, it's enforced through military means, but the end result is economic pain. And I think the fact that we're seeing this shift away from military tip pain to economic pain is a strong tell that they are seeking to move on sooner rather than later. So.
And the fact that I think you led off by saying that actually had physical meetings between U.S. delegates as well as Iranian delegates. I think that's been decades since those two parties have met. To me, that's a sign that both sides want to see resolution sooner rather than later.
Yeah, I mean, it's been almost a half century since the U.S. and Iran met in person. The importance of the fact that nothing came out of those marathon meetings in of itself not a huge deal. The fact that it was held in the first place is a very big deal in terms of moving this forward.
It's hard to imagine the Republicans ending this war in Iran, however they do it in the coming weeks, hopefully, and bringing this back to their base and spinning it positively to say anything. I mean, hey, we spent however many $billion dropping a bunch of bombs. Inflation went up because of it, and it's a big victory for geopolitics.
Yeah, I mean, look, if you want to kind of look for areas of optimism in this, and certainly this is the kind of messaging you've heard coming out of administration officials when they've been making the rounds this week, is that the kind of tactical and operational side of this has been a success. The US has made major gains in degrading Iran's ballistic missile program, their navy, the extent to which we're able to get a deal that has, credible commitments on the nuclear program side, on enrichment. I think the way they've been framing this has been short-term pain for long-term gain. And, certainly the prospect of a nuclear-armed Iran doesn't send you to bed at night with the warm and fuzzies. So, should they be able to successfully wrap this up in a matter of weeks as they're projecting, should they be able to, make material strides in those negotiations underway, I expect that is the kind of messaging they'll be looking to take back to their districts as they go on the campaign trail.
Well, as the saying goes, it takes one person to start a war, two people to end it. Given the domestic pressures, I got to think that the new quote unquote Iranian regime is facing. And Jay, you just mentioned, the inflationary pressures. I thought I read somewhere that inflation in Iran is running in 40% range as GDP continues to detract. like you got to think that they want to see an off ramp and a resolution pretty damn quick here.
Yeah, I mean, look, the primary concern is regime survival and the costs that they are willing to bear to see that through. The pain threshold is pretty high. They do want an out of this. Certainly, it's not helpful or productive to continue to have, senior leaders taken out and bombs falling. But they have also realized they do have enormous leverage now with the Strait. Obviously, everyone for years looked at the Strait of Hormuz and been like, yeah, if Iran tried to blockade that'd probably be pretty bad. And now we get to this moment, and they've demonstrated their ability to credibly blockade the Strait and credibly exercise that leverage. The kind of broader arc of negotiations and their ability to retain that leverage, being able to hold out a little bit longer in order to get more favorable terms on that, I think will be a very interesting dance in the coming weeks when, yes, they do need the war to end, but do they want it to be entirely on the US's terms? That I don't have super high confidence in.
The other side of the coin to this whole conversation, like you said, this could be seen in the US as a geopolitical win, but I don't think discount the effect that or the possibility that in Iran this is seen as a geopolitical win as well. I mean, for them to be able to say, yes, we were able to use the Strait as leverage. We stood up to the strongest army in the world. There was not regime change per se, like the broader regime. They could come out of this geopolitically stronger, at least within Iran as well. I mean, it's probably a longer conversation than we have time for now, but I think it could be potentially a win for the U.S. But as Craig mentioned, just going back to the U.S. and saying, hey, we spent billions of dollars, dropped bombs, energy prices went up, we had inflation. Really, what is the win? Whereas Iran can say, hey, look, we got a win out of this as well.
Well, and I think the extent to which whatever deal is negotiated allows both sides to say we won and save face is probably the most obvious one out there. With the nuclear enrichment thing, that obviously being such a central issue, say that we get that the US is pushing for a 20-year moratorium on nuclear enrichment, being able to say we've, blocked them from doing that for 20 years, but it's not a full outright ban. Like there's a time frame on that. Thus allows Iran to say, well, they didn't infringe on our right. We're holding off on it, but fundamentally, in the long run, we're still allowed to do this. That's that kind of narrow path forward that allows both to claim that win and potentially move forward.
So maybe switching gears a little bit and bringing things a little closer to home here in Canada, we've got CUSMA negotiations starting in a couple months' time here, which we'll be watching closely. What do you expect will be the U.S. aims with these renegotiations, and what should we be kind of looking for on that front?
So first of all, you'll have to forgive me up front because I'm probably going to end up saying USMCA instead of CUSMA because that's what they say down south of the border here. So quick background on the mechanism. There's the July 1st deadline for joint review. All three parties have to decide if they want to renew or not. USTR Greer said that he'll reveal the US's position at the start of June. If any country wants to renegotiate, starts that 10-year expiration clock with annual reviews. What's happened so far has been those technical discussions. Base case, probably not a full renegotiation with the automatic extension. We're probably not getting everything done by July 1st. But it doesn't mean it's dead. It means we're probably looking at annual joint reviews until all parties either agree to that 16-year extension or it terminates after that 10-year window. In that framework, there's going to be a much heavier emphasis on bilateral deals being worked out, the US working out things individually with Canada and with Mexico, and those annual reviews being triggered as the US does more on those individual bases. One thing you hear a lot from the administration is Mexico and Canada are two very different countries, and the US has two very different trade relationships with them. And as such, we should be trying to deal with those issues on a one-on-one basis. Mexico is also further ahead in the process than Canada is in terms of the bilateral US discussion. There's been a lot of variability at this stage as to how far along they are. In terms of, so with that caveat on the likely increased focus on doing things in a bilateral capacity. For Canada, we expect that there will be an emphasis on preserving existing market access, those existing carve-outs for goods covered by USMCA under the US tariff regime. That probably stays in place. We expect that dairy access will definitely rear its head. This is the kind of eternal specter that hangs over US-Canada trade negotiations. It will come up. Whether there's material progress made is a slightly different issue. Steel and aluminium, Canada has put out its intent to seek some changes on the US duties being imposed on those. There were some changes made to the overall structure of the US steel and aluminium tariffs in the past weeks, things to kind of ease the impacts a little bit, make the calculation a little bit easier. Remains to be seen on how much more is going to be sought in terms of those changes. Again, it's a very big issue and something, when I've been up in Canada, our Canadian clients have been like, what about the steel and aluminium? But it's with the deadline coming up quickly, I'm expecting that we'll hear a little bit more. Long story short, don't think it's going to collapse, but certainly going to be in a bit more of that kind of active negotiation 101 phase compared to the first stretch of USMCA.
Yeah, it's interesting. Some of the kind of best performing companies here in Canada the last year have actually been some of the auto manufacturers and auto parts companies, and which has been a big surprise, given the kind of focus on that in the first kind of round of negotiations and the expected impact of steel and all that sort of thing. So always a surprise to see how the market digests some of these political issues. Wrapping up on kind of politics here, what maybe isn't getting enough attention that you think we should be watching out for as we head into the rest of 2026?
Yeah, a couple midterm related themes I would highlight. Should those expectations for the midterms be borne out? What do we kind of expect to see the initial movement for? Obviously, the new Congress will be sworn in beginning of 27, but certainly the groundwork will be laid. Democrats will probably start hunting for proposals for things with bipartisan support, whether they could either pressure Trump politically or find the narrow areas where they can get things over the finish line. Even if they take both chambers, there's a presidential veto. You need a supermajority. That is going to be an exceptionally high bar to clear. Some of these things that I think will be of interest from a market perspective are things like export controls and restrictions on the flow of advanced technology to China. Congress has run significantly more hawkish than the administration on this issue. The administration has softened its posture a lot, taking a more accommodative stance towards the export of advanced technology to China. That key pressure point to watch. Energy permitting reform. I feel like I've been banging the drum on this for a really long time, but it really is one of the few areas with true bipartisan support in the United States. As it stands right now, the energy permitting process is something that does meaningfully slow down energy deployments in the US, and the extent to which you hear this talk about energy dominance, restoring, US energy production. It's one of the last missing pieces. There is bipartisan work going on right now. Maybe we get some headway ahead of that. There's been a lot of fits and starts over the treatment of renewables. I think that is an underappreciated theme, something that also has read-throughs, not just for energy, but for things like mining, things like broader infrastructure, AI infrastructure. And I guess the last thing I'll mention, should we get that, changing congressional composition, or should the writing on the wall become super apparent, the Trump administration has, in many areas, kind of sought to push the boundaries of executive power in the first stretch of his term, kind of do more from the executive branch power. Should there be a clear sign that he's losing his congressional majority and the ability to do things like a reconciliation bill, that's also something that's coming down the pike, potential new inflow spending for border defense. They're trying to do $350 billion in defense spending in the United States. His ability to do those things goes away. And as such, maybe we see more of a push to do those things in a unilateral capacity, executive branch going alone, something that maybe adds a little bit to volatility, given that, there's that more unilateral aspect to it. But also from a longer term perspective, should that precedent be set, I think the kind of aperture for the pendulum, right? Like if we're pushing more in one direction, with that pushing the executive branch powers, should there be a change in administration, the distance to go with that increased leeway with what you can do from the executive branch, something that kind of contributes more broadly to that inter-administration policy variability and volatility, which will, I'm sure, keep me employed for many years to come. So, hey.
Never a dull moment in politics, eh?
I not much thumb twiddling going on here for sure.
Do you suspect we'll hear any more about the 51st state rhetoric once Iran is dealt with, or has that been put to bed, hopefully?
I think that's the kind of thing that he will, say once more if he feels like negotiations with Canada aren't moving along at the pace that he wants it to. But look, the quote unquote Donroe Doctrine thing is very real. Like the US's focus on the Western Hemisphere, on its near neighborhood, and taking that very muscular approach. Yes, we kind of climbed down from the apex of the Greenland threats, but the sentiment and desire to do it and the articulation of this as a priority within US policy documents is very, very real. So I'm sure that will not be the last time that we've heard those kind of comments made. So,
well, hopefully he's got enough on his plate that the next 2.5 years go by without it resurfacing without any kind of real concern.
Fingers crossed.
I was just going to say, yeah.
Craig, Clark, any last comments before we wrap this up?
No, we really appreciate you coming on for this month, Ellen, and maybe if we're lucky, we'll have you back on in the fall when hopefully some of these current issues subside and we're moving on to the next political hot potato that seems to be kind of the rhythm of the things these days.
Maybe we'll be working on establishing a trade deal with aliens or something. I honestly am very reticent to predict anything at this point. I think could happen. But thank you very much for having me on.
Thanks a lot.
Appreciate your time, Ellen.
Thank you, Ellen. That was great.